finance within social media. It's a topic very close to my heart. I like to post on LinkedIn regularly. And last year, you wrote a paper that was absolutely amazing called The Finfluencer Appeal, Investing in the Age of Social Media. It's freely available, by the way, on the CFA Institute's website. So just Google The Finfluencer Appeal, CFA Institute, and you will get access to it. There's a lot of crazy stats in there. Like I just wrote a couple of them, but to give you an example, 37% of Gen Z investors in the US cite social media influencers as a major reason they started investing. Obviously, this has major implications. So I have a lot of questions about this for you. So to start with, what initially drove your attention to the influencer space? And if you had to single out one thing, what surprised you the most in the research you made?
Yeah, so as I mentioned earlier on, one of our themes is the future of the industry and trying to understand those trends that are changing industry practices. And social media is not a new phenomenon, but how it's being used to market, distribute, sell financial products, to deliver financial advice is a relatively new phenomenon, and that poses challenges to existing financial advisory practices, advice businesses. And also it creates new opportunities, I think, for firms that want to have a new distribution channel to partner with social media influencers that deliver online content that can help promote and market their products. So we really want to understand this trend. What are the challenges? What are the opportunities? What are the risks that come with using a new medium like social media and online influencers to promote investment products and potentially to give investment advice? So to understand that issue, we looked at a fairly large sample of online content across three channels: TikTok, YouTube, and Instagram, which was cited as some of the most widely accessed platforms by young investors, Generation Z or Gen Z, those aged between 18 and 25 years old. And we wanted to understand, particularly the young investor, what are their habits, preferences, motivations? Why do they use this online content? So what probably didn't surprise me is the popularity of these channels for young investors. These are the so-called digital natives. They've grown up used to using their smartphones, accessing information through apps on their phones. And so it's almost second nature for them to seek out information about finance and investing topics through their phones, through social media platforms. So that clearly poses an interesting dynamic for the investment industry. What perhaps did surprise me is that a lot of this information can be very beneficial. So it's providing young investors with access to finance and investing. It's maybe encouraging them to participate in capital markets at a younger age, which can only be good for their long-term goals, whether that's saving for a home or to provide for retirement or other sort of life choices that will come further down their career journeys. So there's a lot of positive aspects to this, but we did find that there was a lack of disclosures around when someone was promoting a product, for example. So if you're advertising and promoting a product, there are certain laws that require you to make a disclosure to say this is a promotional video. Those are often lacking. And I think for a relatively uninformed younger audience, it can be hard to distinguish between what is genuinely information of an educational nature versus what is promotion and sort of advertising a product. And where does the line land between, as you said, guidance versus recommendations? So there's a few gray areas that we uncovered in the research.
Yeah, yeah, I mean, spot on. And actually, following up on the first research, the CFA Institute did a second influencer research report, but more specialized on India, if I'm not mistaken. And something I read there was, one of the striking things is that a lot of influencers in India are providing advice, but very few are licensed. Like 2% of them are licensed, but a third of them are offering like stock recommendations, which obviously is a big red flag. You already touched upon it a little bit, but what are the biggest risks that come from this mismatch between having very large reach and influence and accountability or no accountability?
Yeah, I think you touched on a key point there around licensing, and um, you see a lot of influencers online that are promoting products or making recommendations, but they don't necessarily possess qualifications, or they don't possess the necessary regulatory authorizations to do so. And if you don't make those disclaimers up front,
Mhm.
how will a consumer know whether some information is any good or not? So is it coming from someone that is professionally competent in that field versus someone that could be just telling you their views, or giving spot opinions on something without any reasonable basis for those opinions? So that is a risky area, and one of the, I think, takeaways from this work that we've done is that it is important for consumers, for investors that are consuming this content, to try and understand the motivations of the influencer. So again, do they possess qualifications? Are they looking to receive remuneration for making these online posts? Um, Again, what are their goals, and are there conflicts of interest that the consumer should be aware of? So you have to take a dose of healthy skepticism when it comes to consuming online content. And I think the other important message is to not place too much reliance on any single piece of information. Again, it's like, back to what I mentioned at the start, when you form an investment decision, you need a mosaic of inputs, and social media can be an important part of that, but it's important not to place all of your reliance on one particular single piece of content.
You've reached the end of this clip, but the story is not over. To watch the full episode, follow this link. Go on. You can do it.